Our next speaker is Burkett Huey. He is an equity analyst on the industrials team for Morningstar Research Services LLC, a wholly owned subsidiary of Morningstar Inc. He covers aerospace and defense as well as airlines, which I thought were part of aerospace. Prior to his current role, he was an equity analyst for the financial services team for Morningstar Research Services LLC and assisted in the coverage of REIT and banking companies. Huey holds a bachelor's degree in economics from Colorado College. He also holds the Chartered Financial Analyst designation. Burkett, thanks for being with us today. We're excited to hear what you have to say.
Thank you so much for having me. I really appreciate the opportunity to share some thoughts.
Great. Well, the screen is yours, and I'm excited to hear sort of about what Morningstar does. I've always known about the mutual fund analysis and scoring. Have always used those since I was about maybe 10 years old. I remember looking at those. So tell us about this particular wholly owned subsidiary, how it came to be, and what do you do?
Yeah, so Morningstar is maybe best known for its mutual fund ratings, but it provides a pretty diversified suite of ratings for equities, debt, mutual funds, of course, and also acts as an asset manager in a separate capacity for a variety of financial advisors as well as 401k plans and others. So within my group, I cover aerospace and defense. My primary focus is on Boeing and Airbus, Lockheed Martin are probably some of the highest, the most visible names, but I cover the aerospace suppliers, the airlines, which do actually have their own separate group in the S&P 500. I have visibility into pretty much the full value chain for aerospace and defense, and tangential exposure to following the commercialization of space, primarily through the defense prime contractors.
Yeah, okay. So the Lockheeds, the Northrops,
Mhm.
you're really seeing into that world. How much of your focus, given that you've got that entire value chain and now there's this like ringing noise coming from commercial space, how much attention does that get in your day, your week, your month, now that it's kind of this special thing going on?
Well, I would say that it's definitely something that's been kept in mind. I'd say that the difficulty on my end of to understand these companies is that first, Morningstar's methodology for rating stocks is pretty old school. We project out cash flows, discount it back to the
Yeah.
present, and I would say that the projecting cash flows for companies that many of which may be pre-revenue is a little bit tough, and dependent on the development of a market. I guess what I would say is that I've definitely paid attention to you know these companies as they are partnering up with maybe some of the larger defense primes to enhance
Mhm.
capabilities, and I see that kind of as a way for you know larger players to perhaps integrate some of the innovations that maybe more startup-y type companies might be uh, putting into their business model.
Yeah, so a nimbleness through acquisition, like maybe an
Mm-hmm.
Orbit Fab into Lockheed kind of situation.
Mm-hmm. Yeah, I mean, I think the right way to think about a lot of these companies, at least in, and I mean, this is pretty very early stage. So, definitely not the definitive word on this, but I think the right way to think about a lot of these, pre-revenue companies and their relationship with the defense primes is almost like that of a drug manufacturer and the and emerging biotechs and emerging drugs. It's really kind of tough to see at that early stage what the ultimate value of these target companies are and what the ultimate value of these IPs are, because either the product works and there is some value to it, or the product doesn't work and there is no value to it. Mm-hmm. And it's difficult as an investor on the outside to really have to see that, particularly if you don't like myself, I don't have specialized engineering experience. I'm a financial analyst. Yeah. So I guess I kind of view this as I view many of these companies as startup-y, the most similar kind of thing, I guess, is the relationship between biotechs and drug manufacturers, in that there's definitely an innovation pipeline out there getting developed. Perhaps it may get acquired, perhaps not. I was very interested to see that report from the president's office about mergers and acquisitions within the defense space yesterday. I don't think they touched too much on the relationship between the defense primes and emerging technology. I think it was focused on more prime to prime and prime to sub supplier. But I guess that's kind of how I've been thinking about things.
Yeah, really interesting. Given the willingness to engage with these pre-revenue companies, are people friendly to just changing their expectations of what we should be looking at when we're investing? Sort of like in the real estate bubble or tech bubble back in the day. Talk a little bit about some more parallels there, and whether, how careful we should be in allowing this flexibility in looking at investments.
Well, I mean, I again, when I try to think about things, that valuing something with that's uncertain, I try to bring it back to the progression of free cash flow, mm-hmm. and how sure you can be in projecting it. Yeah. And a critical component of that is, maybe if you're not super certain about what the projection of free cash flow is, if the discount rate at which you're bringing back that free cash to the present is super low, as it was definitely in 2020 and for much of 2021, it doesn't really matter quite so much if you can't project things out. But as we're seeing 10-year yields rise, I think that the opportunity cost for holding risky assets is increasing. And I mean, you can see that in the U.S. 10-year yield. I mean, it's what, doubled in the last 6 months, I think. So, I guess that now I think that if there is IP out there, and I think that some of the engineers of the primes would probably be some of the best suited to determining what the value of this intellectual property actually is. Perhaps there's going to be an opportunity for partnerships at very nice valuations. Yeah. But ultimately, you're going to have to. But to do that, you have to have an opinion on what the underlying value of the intellectual property is. And as of right now, I certainly have a very tough time doing that. Yeah. And I'd imagine, and at least looking at the valuations of some of the de-SPACed companies, it looks like many other investors are looking at that as well. I don't cover directly into the emerging space companies, but I
Right.
certainly do follow their stocks, tangentially as they relate to my coverage.
Yeah. So let's back up a little bit. Great answer on the changing interest rates and the time horizons, really interesting. Go back a little bit to the nuts and bolts of your process for assessing space companies and the ratings. And then talk about, I guess, speaking of markets, talk about who uses them.
Yeah. So, like I said, I don't directly cover any of the space companies, but I'm happy to talk about aerospace, and I think
Mhm.
it's probably going to end up pretty similar for space.
Yeah.
I guess I was thinking about this last night. I think the defining characteristic of the industry is just the massive research and development cost required to create a product. And I think from that, there stems a lot of different sub factors within the industry.
Mhm.
One of which is that it's really tough for competitors to replicate products once they're there. And frequently, what you'll see with suppliers to aerospace products is that even if a product could be replicated, the even if some widget on a plane could be replicated, it's really tough to change the design of a plane to fit this new widget, and the cost savings on that would be pretty minimal. So once you're in, it's really tough to unseat a company with a platform. So really, I think a lot of projections are based on supply and demand rather than competition
Yeah.
among participants. I'd say a second factor is that because these products are pretty expensive, customers tend to be a bit. I'm not sure if price sensitive is the right way to put it, but I certainly would. I think that I don't think it's that astonishing to say that the reduction in price of launch
Mm.
services is probably a big driver of the increased demand for small satellites, and opening up. It makes some of these new use cases a little bit more affordable, and it makes some of these use cases make sense a little bit more than maybe it did in the 2000s.
Yeah.
I'd say another defining characteristic of the industry is just the and I guess the difficulty of customers to switch from supplier to supplier once they've integrated with a particular system, simply just because these products are so complicated and it takes a lot of training. And usually these products last years, if not decades. So it can be a little bit tough. It can be a little bit tough to. I guess that breeds kind of a conservative customer base, because when it's different than buying a candy bar in the grocery store.
Yeah. Yeah.
If you don't like it, the next day you can just go get a different kind. You can't get a new engine on an aircraft tomorrow if you don't like it.
You could call it supplier plasticity and say it's low, right?
At Morningstar, so I guess what I was trying to get at is two what we call moat sources. So we call that a switching cost. So we think that
Okay.
the customers have pretty high switching costs, particularly for in the engine space, because it's you can't you can't change your engine on most aircraft, so
Yeah.
you're
Yeah.
kind of captive to the engine maker on prices for things such as spare parts,
Mhm.
maintenance and overhaul. There are some fringe cases, but as for most of the time, customers are really reluctant to switch.
Yeah. No, that makes a lot of sense. And it's good news for investors in suppliers, right? It's a lot of predictability in that market.
On the demand side, in normal times, yes, that definitely is a good provider of predictability. I would say one of the big factors of unpredictability is that research and development costs, like we were talking about at the
Hmm.
first point. Uh, it's I think I was seeing some an old article on what Boeing thought the 787 was going to cost to develop back in the early 2000s,
Yeah.
and I think it ended up being 3 or 4 times that, three and a half times what they originally expected. So that's a pretty big difference on multi-billion-dollar development programs. So that's going to be a big swing factor in the in operating results. And how long does it take to capitalize those development costs is a big factor.
Yeah. Um, when Ron Epstein was here the first time back in November, I don't know if you saw his talk today, but he talked about the fact that with space R&D, it's not typical R&D because it typically is government funded through a contract. There may have been some of that with 787, but the Starliner for sure was heavily subsidized R&D, and he saw that as a different kind of category. Can you talk about that a little bit?
Yeah, yeah. So that's pretty analogous to what you see at a lot of the defense primes.
Yeah.
Um, you know, you see that with the F-35. You see that with a lot of development programs there. Traditionally, a lot of the R&D is sponsored by the government,
Mm.
and because of that, they're able to negotiate lower
Yeah.
prices, and kind of specialty deals with that. So I would say that the difference between commercial R&D and defense R&D is whoever pays for the intellectual property gets the intellectual property. And frequently, like for instance, on the engine side, that's pretty much all private in most cases. You'll see that and because of that, you see pretty high margins on the aftermarket, or spare parts. Whereas on the military side of engines, since the government pays for the since the government pays for pays for a lot of that research and development, you really don't have any difference in margins between the original equipment and the aftermarket.
Interesting. Interesting. Talk about where Morningstar is headed next in terms of the role there. Is it status quo or is there growth? And what do you see happening?
In as it relates to the aerospace space, or
Yeah, so the subsidiary, the Morningstar Research Services, do you think there'll be any changes in how you go about the work in the next 2 to 5 years?
I think that the way that we've been thinking about at least the aerospace industry is that you know as emerging nations become wealthier, they tend to demand a more travel. And so I guess we kind of see that there's a bit of a long tail of populous nations that can develop into populous, lower income nations that can develop into lower middle income and middle income nations.
Yeah,
You
so
know, I'd say
Civis, Next 11, all those guys, you're seeing that as
exactly. And since there's two suppliers for commercial aircraft, and very few and very limited suppliers. This is a global industry. All of that global development essentially flows to the main suppliers of commercial aircraft. So I guess that's kind of the way that I think about the long-term trajectory of growth. You know, it's a function of populous emerging markets developing.
yeah, yeah. No, that's a really good insight because you think about this, we were talking about government R&D, and then we look at our national debt and all this pandemic economic policy, and you worry a little bit. So, talk about the overall health right now of the industry versus 3 years ago and 3 years hence.
Uh, well, it's a tough question. I'd say
Yeah.
I would say that the pandemic definitely had a pretty major impact across the board, aside from your pure play defense
Mm-hmm.
suppliers.
Mm-hmm.
And so, what that means for most carriers, most airlines, and most suppliers is that they took on a good bit of debt to survive periods of low cash flow, while still working to invest in the future. That's it varies between industry participants, but so I'd say the story over the next 3 years for a lot of airlines, certainly Boeing, certainly many suppliers, is working to delever their balance sheet, delever their balance sheet with incremental growth in the industry. So I think that's probably going to be a big part of the story.
Yeah. So when you specifically mentioned Boeing, you know, major delays on multiple projects, issues, public, you know, public disgrace in some ways of their processes and procedures, that has borne out, even though it's separated from the space part of their business, in some of the accomplishments there. You know, obviously a wonderful company over the years. Talk about how that has affected the balance. There are so few airline suppliers, airline suppliers. Can you talk a little bit about how that has changed that dynamic and where you see that going?
Yeah, so I would say that Boeing is a story unto itself. I could talk about that for another half hour if you'd like,
Yeah.
but I'd say that really the key parts of the story in the near term are getting 737 Max deliveries in China. That's a huge market. I think it accounts for roughly 25% of the market as it is, and it's going to account for a pretty big part of the growth in the market. That's an emerging market with a lot of room to run.
Mm-hmm.
And so 37 Max really needs to get delivered there. And it looks like they've made some pretty good progress. 787, to my understanding, there's no new issues. It's getting their processes approved by the FAA. We were talking on they were talking on the earnings call last quarter. They had some pretty tight deadlines for themselves, or at least markers at which investors could really hold folks accountable for them. They were talking about getting the 37 Max delivered in China this quarter, and the 787 delivery resumptions in April timeframe. That's pretty soon. That's so I think if they can get that, that's gonna really start easing the pressure on the cash side. And with that, I think they kind of need to walk a pretty tight rope here between delevering the balance sheet and investing in new products, because what they don't have is, and what's important, is a middle of the market aircraft to compete with the A321neo and the A321neo XLR. That's a really big market. If you look at the backlogs for Airbus, they're roughly equivalent for the A320 and the A321neos. So that's, you can't just cede that entire market to your competitor. So I think that's what they're going to need to do.
Yeah, great insight there. Thank you so much. We just have about 2 minutes left, and I'm going to challenge you to come into space just a little bit more. I know it's not your expertise, but you have a lot of insight from looking at these companies. Um, we talked about the ringing new stuff. How much do you hear people talking about the Starship singularity that we heard about earlier today? Um, so, do people believe Elon Musk's projections of the change in launch costs? And you referenced earlier that the changes in launch costs had had an impact in the past. Talk about the next phase of that from just sort of where you're sitting looking at these big primes.
So just to paraphrase your question, make sure I'm understanding correctly. The
Although
you're
maybe it's not very intelligently asked, but
no. I'm just like just the projections of projections on launch costs. I guess I
yeah,
would
and
say
and and the hype around it. So not just projections, but also talk about your interpretation of how people feel about those projections.
okay. Yeah. So I guess I think it goes back to what we were talking about of just the big expense of putting something in space. And I would say that we've seen a lot of delivery on that cost reduction so far. You know, Elon and others think that there's a lot more room to run from simply putting more launch products on a putting more launch products, putting more products on an individual launch. And that makes sense to me. I mean, I'm not an engineer, so I can't really speak too much into that. But I would imagine that you could put 50 different things on the same product. Um, so yeah, I guess I would say that it's not unreasonable to expect continued reduction, and that's going to unlock more demand.
Yeah, yeah, great. Burkett, thank you so much for being with us today.
Thank you so much for having me.